Nigerians now have the option to receive their diaspora remittance payout in Naira from a regulation from the Central Bank of Nigeria. The Apex Bank has directed international money transfer operators, IMTOs, to commence remittance payouts in Naira to beneficiaries in addition to foreign exchange. It has also directed that the investors and exporters windows exchange, the rate should be used in determining that rate for such payouts. The market is open now. That's the NGX. But let's look at yesterday. There was a bit of a big dip, 2.03%. 62,748 is where the market closed yesterday. We're going to be speaking extensively about the market with Muyiwa Oni, who is the head of equity research, West Africa region, Standard Bank Group Securities. You're very welcome, Muyiwa. Good morning to you. Thanks for joining us.
Thank you for having me.
Good to have you again. Lovely to talk stocks. What do you make of what we've seen with the markets, the NGX so far?
So it's been positive, and I guess it's showing that more positive optimism that investors seem to be having for Nigeria with the new administration. So one can say the market is a leading indicator, and based on what we're seeing right now, there seem to be some positive expectations for Nigeria going forward. And I guess depending on where you sit, you might say the market has run hard and is looking oversold right now. But if you track valuation, so PE around 11 times, we've seen, I think 2016, it peaked at over 20 times. ROE much stronger than where it was in that period. So ROE for the index is around 19-20% currently. At the time, it was about 6%. So one would say from a fundamental standpoint, the market looks healthy.
Yeah.
And I guess it's really more the risks that might come from these current changes. So short-term risk like inflation, how does that affect operating performance of businesses? The current adjustment in the currency, how does that affect revaluation losses or gains if you're a consumer company, and all those. And I guess the conversations of how the outlook starts forming out beyond here now. So I would say for the consumer sector, for example, for the past 10 odd years, the environment has been quite difficult.
Okay.
Way more Nigerians have fallen off that middle class line, more into poverty lines, and consumer companies have struggled. And so if you're in an environment whereby there will be stronger growth, whereby there'll be more jobs as well, and so one could actually be moving closer to that phase where outlook starts becoming positive. So I guess it depends on how you really want to read the market. So if you're a trader, you might say, I've made enough gains, let me walk out. But if you are an investor and are thinking, let me see how things go over the next couple of years, then one could say the market still does have some legs. Okay.
Well, speaking of those legs, and speaking of the conversations that you mentioned, you talk to foreign investors. What's the mood? What kind of questions or conversations are you having?
So a number have been shocked, quite interestingly. So more because of how the country seems to be moving on, despite the removal of petrol subsidies. Some felt there will be so much protest. I guess there was the comparison with what we had seen so far in Kenya, and thinking that it's likely that could happen as well. And most of them have been positively surprised with how the country seems to be moving on. And I guess they were quite surprised with how decisive as well the president seemed to have been, because this is an issue that has lingered for quite some time, and for someone to come in and make such decisive positions, I think they've seen that as positive. And I suppose it's really more what goes on from here as well. So there's that far more positive vibe, but there's some caution, because when you're looking at interest rates and thinking, it's too low, and maybe it's giving the sense of where Turkey is, whereby there's very high negative real rates. The view was Egypt didn't adjust on the rate quickly after liberalizing their currency, and so there's concerns around that. And I guess there's that acknowledgement that we're in a negative real rate environment globally. Yeah. And 5% negative isn't really too bad. But if you're talking about 15%, 16, 18%, then that incentive to invest, and not just for foreign portfolio investment, but even for a Nigerian, if you can earn 6% in dollar terms, why should I do 5 or 3 in Naira terms? And so those seem to be the conversations. But I think overall, there's that far more positive vibe on the country, far more positive expectation. If I think about the conversations, I'll say since the president's speech, I've had far more conversations with foreign portfolio investors than when I combine 2022, 2021, and even some part of 2020. So before we fell off interest
healthy.
in foreign investors.
Okay, look at this graphic we have up here. So can we continue to have, can this market still be driven by domestic investors since we're not having that much foreign participation? Also, even the capital importation numbers, although that's first quarter, so that was before the inauguration of the president, January through March, that one falling, I think, 28% year on year. What's your take as far as can domestic support this, or do we definitely need those dollars coming in from overseas?
I think on a market participation point of view, you might say that there are actually quite a number of domestic players and savings in the domestic market that can actually drive the equity market. And so if you look at performance so far, you haven't really seen foreign participation that strong.
Right.
So what seems to be happening is residual funds, so reinvestment of dividends. But on the equity side, there hasn't really been new money. What we've seen on our own side is some of these foreign investors on the equity side taking out funds. On the fixed income side, they seem to be trickles, but in general, you haven't necessarily seen that level of that kind of inflows we've seen in the past, or any inflow for lack of a better word per se. And so what I see going forward is once there's that comfort, if rates start looking far more reasonable, then you could start seeing strong interest. Because for the equity portfolio investor, he is thinking of sustainability of the fixed income on the FX market as well. Because I guess there's still that worry that, so if you look at the FX market, we had challenges between 2015 and 2017. Things seem to normalize 18, 19 to early 2020.
Yeah.
And then we go back into that crazy flux, and it's like we're coming out of it now. But I guess there's that concern that will this be sustainable, and confidence that will come from that as well.
You've already mentioned the negative real return. So, we had Ugo Dre, founder of Nairametrics, someone you know as well, on the show yesterday. He was talking about that environment. And of course, with the large money supply, finding somewhere to land itself, leading to those oversubscriptions we saw in the primary markets auction for TV. Is a low yield environment good for stocks as on the money market side?
So generally, if you look at that relationship between equity market returns and interest rates is negative.
Okay.
And the main reason why is because financing costs. So at lower financing costs, you have access to funding, either to invest directly in the market or even for businesses as well to fund their projects and expectations. And so in an ideal situation, a negative interest rate environment a low rate environment is positive for equities, and high rate is negative. But if you think that inflation is high right now, and even for businesses as well, a heightened inflationary environment is negative. And so particularly if you look at an environment where poverty is high and ability to transfer that cost is high as well, most companies seem to be absorbing some of those losses right now or absorbing the pressure from the price increases. And so for the equity companies or for businesses generally, you also still want a situation whereby this high inflationary environment is corrected. And so one might argue that in the short term it might be painful, but in the longer term it will be positive.
Okay. I do want you to listen to something Ugo Dre of Nairametrics said yesterday about this disconnect between the fundamentals for the markets and the economy as we know it. So let's take a listen to that.
So I'm trying to be careful. I've been telling people, be careful right now. The economy is not so good. Yes, you're seeing a lot of the stock equities market is usually a bellwether, but the economy is not so good. Inflation rate is likely still going to go up. You can see what is happening in the exchange rate. People are, subsidy removal has been done already, so people are grappling with a lot of issues. You're seeing prices go up, purchasing power is down. So companies are likely going to face serious headwinds down the line. Banks might do well because of course, FX valuation and stuff. But for most, companies, they're going to struggle. And the feelers that we're getting from them is that, man, it's not easy. We're struggling. So likely profits are likely going to decline third, fourth quarter, right? So if that happens, how does that justify the valuations that we're having at the moment?
All right, so how does that justify valuations at the moment? What do you make of that?
So I guess in the short term, there's clearly going to be these shocks and risks. But if you think about it from an investor standpoint, so you're thinking a bit more longer term. So if for a trader, you might say things there will actually be these shocks, and so maybe it's time to take profit because there could be some revaluation losses, FX revaluation losses for the consumer companies. For the banks, depending on how your balance sheet is structured, you could either make some big gains or some losses as well.
Yeah.
So I guess there's that fair point of the economy is also quite stretched and strained right now. But if you still engage with these same companies as well, particularly before the elections, I guess there was that far more positive view that the candidates seem to have a far more pro-business approach. And currently, we're already seeing that with the president. And so these same companies seem to have a far more positive expectation for the future.
Yeah.
So it might be difficult now. And depending on how quickly we get out of the difficult situation, one can start seeing that positive. And that's how one could look at it as well. So it's a case of half full, half empty. Are you looking at now, the pressure now?
Long term.
Long term and the future. So depending on what that is, then you could position in the market.
I quickly want to get your thoughts on that the story on the central bank getting IMTOs, money transfer to convert diaspora remittances into Naira at the INA rates. What do you make of that development?
So I think it's positive, and it's positive because we haven't before now had remittance flows come directly into the market. So the central bank's rules in recent times have been they should take their funds either in dollars or in e-Naira.
Right.
And so this one would argue is an addition. And there's always been that debate on remittances, and talking to our traders, our FX traders, they've struggled with that size and the impact on the economy. So you're talking about $20 billion last year, but they would argue it wasn't seen in the market.
Right.
And so maybe this policy change allows for some of these flows to come in, because it's been a big debate of see $20 billion of remittances annually, see where our reserves are, and ideally once you see that add up. And so maybe this policy does help that to add up. But overall, it's still a positive, and it's adding to the players in that I&E window.
So real quick, I want to get your outlook for the markets looking to this, second half of the year and beyond that, or maybe if you want to mention any sectors, maybe financial or industrials or anything like that.
I think from an operating performance side with the financials, so what is more broadly positive, because valuation gains will come in, given this adjustment, with the far more liberalized central bank as well. Increased trade trading, one could see FX trading income come in. On the capital side, because of the currency adjustments, there are questions around capital pressure just because of the FX component of the balance sheet. But I think overall, there's still some broadly positive outlook on the banks. On the consumer side, there's still some pressure because of inflation and how that affects bottom line revaluation losses, because a number of them have been borrowing from parent companies in USD. If you look at how that does affect your finance costs and so on, there's that pressure that could come. But I think, and in terms of outlook for the NGX in general, I think it's difficult to tell right now. Just more because quite a number, if I look at my target prices, a number have been blown out. So even though I've had to adjust some, just because there's that general sense that maybe equity risk premium on the country is improving as well, and so maybe expectations is for valuations to start normalizing somewhat. But I think in general, there's still that positive sentiment, because one would argue also that it's just domestic participation now. If offshore start coming in, then things become different. Because a couple of weeks ago, I hosted a US-based investor, and he was joking that there's this disease that might come into the market soon. It's called limit up. So it just keeps on
going
going
up and up. Optimistic.
Yeah.
optimistic. Muyiwa Oni, Head Equity Research, West Africa, Standard Bank Group Securities. Thank you so much for your time. Really appreciate it.